In this video, I will be revealing my Trading212 Dividend Pie and my plans for it, so roll the intro.
Euan Copeland presents Dividends. Trading212 Stocks and tie-dye t-shirts.
Wait, what? Who put that there? Intern! Welcome back to my channel. My name is Euan, and on this channel we talk about personal finance and investing in the stock market. So if that's something that tickles your fancy, then hit that like button if you like that intro, and subscribe to my channel as I'm trying to hit 10k by the end of this year. In this video I want to go through my Trading212 Pie and what it's doing, what stocks are in there, etc, and my plan for it overall. But remember, I'm not a financial advisor, I'm just a random dude on the internet talking into a camera, so please do your own research before investing your capital. So my pie is called dividend income. I know, not very imaginative, but I tell you what, can we have some pie related puns down in the comments, like who let the pies out, feast your pies on this, or Pat Felicia. And whichever one gets the most likes, I will change it to that. But anyway, I'm getting a bit distracted from the task ahead, so let's get on with it. I'm going to quickly explain why I've chosen the dividend approach, because I know that I'll get a comment or a question down below, so I thought I'd just address it here, and because I haven't made a dedicated video to it yet. So there was a study done by Guinness Atkins Asset Management where they looked into the total return of the S&P 500 since 1940. And if you look at this graph, you can see that the length of the holding period greatly influences the impact of dividends. So in short, the longer that you hold, the more impact that dividends actually have on the total return of your portfolio. This study was focused on all of the stocks in the S&P 500, some which don't pay dividends. So if you think about it this way, imagine the impact of dividends on a fully dividend paying stock portfolio. And I'll link the article down below where I found this graph. So let's jump into the Trading212 app, and as you can see, my Felicia Pie is actually behind. And that's because I set a goal. If we go in here, you can see the goal that I set is 100k, and the projected value of investing £50 every single month into this portfolio for 40 years is only £73,000. So this 4.85% doesn't actually include dividend reinvestment, which is a bit of a flaw in the system, and they probably should do that, but oh well. So what I did was actually calculate it myself so that I could see how much I'm estimated to get down the line, and it's safe to say it'll be a lot more than £73,000 if it continues like it has done for the last 5 years. However, saying that, past performance doesn't indicate future performance, so we've got to be a bit careful when deciding that this is what we're going to come up with, because you never know what might happen, and it's probably not going to have the same growth rate for the next 5 years as it did for the last 5 years. Including dividends, this portfolio should pay me around 11% in total return, but please remember, past performance is not an indicator of future performance. So anyway, let's go through what we've got in this Trading212 Felicia Pie. So we've got 12 slices. One, we've got Apple, and then we've got an S&P UK Dividend Aristocrats ETF, which is at 10%. And then we've got Disney, Coca-Cola, AT&T, Unilever, SSE PLC, IBM, Bank of Montreal, Starbucks, Wells Fargo, Legal General Group, and that is it. So the portfolio isn't massive, it's only got 12 companies, and the dividend yield that comes with it isn't massive either, because one, we've got Disney that have cut their dividend and completely cut their dividend, and also Wells Fargo have reduced their dividend, so it's not looking as good as it once could have done, but potentially down the line they could raise them back up, but who knows, we'll see. By my calculations, with an 11% return, I should hit £100,000 in 27 years, and my hypothetical dividend yield for that is 3.26%. So effectively, in 27 years, when I reach 100k, I should get a dividend income yearly of £3,260, which I know is not a lot, but come on, it's only £50 a month, so I think everyone could probably stretch to that. And for me, because it's in an ISA, it will all be tax-free, so who's laughing now? So in 27 years, I get a tax-free £270 every single month. So even if that's not paying for my rent or my house by then, hopefully. It will pay for a few museum trips to Tesco, a few rides on the bus, because isn't that what old people do? I mean, I would only be 52, so maybe I'm not that old in 27 years. So apologies if you're 52 and older listening to this, because I just called you old. But anyway, maybe it calls for a midlife crisis Range Rover for £280 a month. It'd pay for that. So it's better than nothing, isn't it? Just a reminder though, dividends are not owed to you. They're not a legal right or anything, even if you do own the shares. So a company can cut them at any time, and they have done to this portfolio already. And also the dividend yield could be completely different because they could change how much they want to pay out, or the stock price could bomb and then the dividend yield would be different. But this is just sort of estimates. This is just modelling for the future to see what's potentially possible. I know that £3,000 is not a lot of money, but if you think about it this way, another hypothetical if you will, if you manage to 10x this and put £500 away every single month into this portfolio, after 27 years you would have $1 million. And you'd have £1 million invested into this portfolio, and you get a yearly income of £32,600 purely from dividends without any tax if you had it in your ISA. So that's around £2,666 every single month, which is the equivalent to earning £47,000 for me as a salary, because once you incorporate tax, pension contributions, and of course student loans, then that all adds up and takes a lot of your income away. So that is the equivalent of me earning now £47,000. So maybe that's something to consider, because if you manage to put £500 away now, then 27 years from time you will be able to live off your dividends. And this is just purely £500 a month. I know that seems like a lot now, but if you're young like me, then the potential to earn £500 extra a month is not too difficult, I don't think. You could definitely find ways of making that £500 from side hustles or job increases, etc., or pay rises as they might call them. And then you would never have to work again, and you'd be financially independent and free from your job and free to do whatever you want. So for me, I need to get my YouTube income up so that I can put that £500 away every single month and hopefully get to a point where I don't have to work if I don't want to. But who knows where it will be in 27 years. Might not even make it that far. That's a bit morbid, really. Anyway, I hope that's got you thinking, and I know that some people are against dividend investors, and I know that I'm going to get some comments about this down below, but this is just my plan. My overall plan is to get to a point where I can max out my ISA contributions, so $16.60 every single month, and then that will put me in proper good stead. And in 17 years I will be able to get to that £1 million if I manage to max out my ISA. So that is the plan, that is the hope. And I'd have a naughty 32k income tax-free, so yes please. So make sure you like the video if you like it, comment if you fancy commenting, and subscribe because I'm trying to hit 10k, as you well know. And also join the 54 members in our Discord group, because there's a nice little community growing there. The link is in the description. And that's it from me. I'm not a millionaire, but I'm trying to help you become one. So peace. And because I haven't made a dedicated, Pie Felicia, feast your pies on this. Pie Felicia.